Emira Property Fund plans to buy out SA Corporate Real Estate, which has garnered a lot of media attention after several board members resigned. Prudential acquired a big chunk of the business and demanded board changes, and a probe was launched into one of the oldest property companies in South Africa. Now, this is a deal that could make Emira, if it does go through, worth 15.5 billion rand. Joining me more from the inside is Geoff Jennett, the CEO of Emira. Thank you very much for coming in, Geoff. So, how, in this particular tough times of the property business, how ambitious is this?
It's relatively ambitious. It's a good thing, we think, for the South African property industry, and allows two mid-cap REITs to join together in portfolios that have similarities in terms of being a diversified portfolio, and allows shareholders to have greater liquidity, greater size, greater diversification, and we think at this stage in the property industry, it's a good thing.
And also, it'll be a great risk as well at the same time.
There are always risks attached to that, but we know the way that we operate at Emira. It's important to understand everything, assess the risks, and only from assessing the risks can you make that very informed decision in terms of whether to proceed with this.
In the lead up to this deal, we're going to go through some of the stages and hurdles that you have to go over before you get anywhere. But some of the troubles there I mentioned in the intro, how is that panning out at the moment?
From a South African economy perspective, it's difficult in the South African economy, having a slow GDP growth of only 0.6%. It's tough. Our tenants are taking a strain. But we continue at Emira working our tenant retention ratios, making sure we look after our tenants, continuing to reinvest into our portfolio. And it's because of that, it allows you then to get through these tough times.
And we mentioned the intro as well, SA Corporate Real Estate, a number of board members have resigned. Is that coincidental, or is it linked?
So that's why this process has taken quite a while, is that we've been trying to engage with SAC since early June. And they've had some board member losses. Their past chairman has passed away, sadly. And so there have been some complications. So this is why it's taken a while, which actually then got us to that stage where we then needed to visit shareholders and to ascertain whether they had an interest in it. And that was why we then went public with the SENS announcement to share with everybody our non-binding indicative offer, so that we could encourage the board to either engage with us, or preferably to engage with us, and then to tell us whether this is something they think they're wanting to pursue or not, so that we don't waste each other's time.
What about Prudential? I mean, what are they saying about the deal now?
Prudential, we engaged with them, and Prudential are in favour of us engaging. There's obviously discussions that we must have in regard to price and that, and I understand from the latest SENS announcement that they've withdrawn their request for an emergency general meeting to appoint board members, because they've recently appointed 4 board members to give them the capacity to look at this and to make the best and the most correct, informed decision.
Now, let's just have a look at the timeline of this deal. So your due diligence, you think, how long do you think that's going to take?
Yeah, so that's the first and really important part, is that due diligence will take between 4 and 8 weeks. And very important that it's a reciprocal due diligence for SAC to look at us and for us to have a look at them, understand those cash flows, those contractual commitments that are there. And so there's at least 4 to 8 weeks on that. Once you've got through that, we then have to arrive at a scheme of arrangement and work out what that swap ratio is between SAC and Emira shareholders, and maybe there's some versions or hybrids of that. And once you've then reached agreement on that, which could be another 8 weeks, you then move into competition commission approval, which in a transaction this sort of size would take probably 3 to 4 months.
So we're talking maybe early next year at the earliest, shall we say? Okay, and let's have a look at that swap as well. You're offering basically 0.25 Emira shares for 4. I know that you were saying earlier the share price has fluctuated. It might be a bit different, but that's basically the board of, that's your deal at the moment, 0.25% for SAC shares. Is that likely to change at all?
It all depends on what's going to come out in the due diligence. If we find that the assets and the contractual commitments are more in our favour, well, then we'd need to adjust that. Again, we would adjust that down. And let's just clarify what that swap ratio means. It means that for each SAC share that someone owns, they would get 0.25 to 0.24 to 0.25 Emira shares. In other words, 4 or 4 and a bit SAC shares for each Emira share that we would offer.
Something else I have to ask you, I mean, have you received the full report on SAC that was put out recently?
You're referring to the whistleblower report?
Yeah.
No, we haven't.
You haven't got it?
No.
I mean, surely as part of the due diligence, you should be wanting to get a hold of a copy of that and go through it.
That will be important, and so from a due diligence side, important to understand what's happening at the property level, then also understand what's happening at the company level, and that would certainly include that, just to make sure that we absolutely understand this before we then actually took that next step, because ultimately we are representing shareholder funds here. We've got to make the right decision for the Emira shareholders, and that also has to be a good decision for the SAC shareholders. So it's important to understand that and properly understand that before you reach that final swap ratio and whatever terms and conditions that we will need.
And what about the wider issue of consolidation in your industry? I mean, there's talk about Safari again today, also going the same sort of route. Do you think we're going to see a lot more property companies trying to consolidate in these difficult times?
It all depends on the particular moving parts inside those companies. So interesting in terms of the Fairvest, Safari, and now Capital Land. So that's got its own path. But we do think that this sort of consolidation is a good thing. Emira and SAC are both in the top 20 of SA REITs at the moment. And by combining us would put us into the top 10. And so we think that's a good thing. It's easy always to talk about consolidation, but a lot also boils down to what the price is or what those swap ratios are. So often you have, you'll always have two management teams. There will be certain synergies. So you've got to work out how best you're going to do that. And at the moment, SAC has had some leadership difficulties that they're going through a new board and looking to appoint executives. So we know that they've got some challenges on that side. But then if I look at Emira, we've got a proven track record in terms of dealing with some difficult assets. We've come through a difficult time. We've rebalanced our portfolio. We've sold off some offices. We've got some capacity. We have an excellent asset management team. So we'll be able to take those existing core skills and apply that where needed into the SAC. So consolidation, we think, is a good thing in this case.
So talking about that swap ratio, bearing in mind you want these assets you think that will make into a major player in this country, would you be prepared to up it a bit if you had to?
If what we found in the due diligence would necessitate that, then of course we would. And I think, and it's also important to understand it's a reciprocal due diligence. So we would want SAC to be comfortable with what they then receiving in return, being Emira shares. So are we flexible on price? Yes, but very importantly, it has to be at the right price, because you can have great properties, but if you end up overpaying for them, well, that's going to cost you forever.
And what about, just supposing that the Competition Commission does give you the go-ahead next year, what strategy are you going to use to try to improve your fortunes in a very, very distressed market right now?
So we would utilise the same Emira way that we are using at the moment, and that is to get involved with our tenants, to look after our buildings, to make sure that they are in top condition, and we would be applying that exact same strategy with our proven asset management team into SAC. We've got skills in most of their areas. And the other important thing is that to the extent that it makes sense for us to bring in other parties with us, we would also look to do that. We've got a joint venture in the lower LSM retail side in our property fund that we name Inuka. So there's certain properties in SAC that we could look to collaborate on that. There are other ones as well on the residential side where we team up with Transcend. We're a 34.9% shareholder in Transcend. The major shareholder there is IHS. They've got some good skills there. On the residential side, there are other players as well that we've also embarked with on the residential. So to the extent that we are short on skills, we would add in those experts to help us on this, because our approach is to collaborate and to co-invest with parties.
What do you think is the biggest drawback in this deal?
On the drawback side, it's an interesting question. It's probably going to be that by us taking on 160 to 200 assets might mean that the focus that we've got on our existing assets that we already own and manage gets diluted. But that's for us to manage on an internal basis. We've got capacity in terms of our team, so we would make absolutely sure that our existing portfolio still receives that Emira experience, that Emira way of being looked after while we are busy taking on those assets.
And lastly, very briefly, are you looking out there for any other assets possibly to take over?
So Emira always looks at opportunities that are out there. It's important for us to go and investigate and see what's out there, but nothing that's particularly interesting on the horizon other than SAC at this point in time.